Hi all of you. Today we are going to see about different types of candlestick pattern. Let's move on to the candlestick pattern. First of all, we're going to see about the piercing pattern. Yeah, it's called piercing pattern. First of all, what's the meaning of piercing pattern? What's that? No, it's piercing pattern is a two-day candlestick pattern. Two-day candlestick pattern that marks a potential short-term reversal for a downtrend to an uptrend. You understand? It's a potential short-term reversal for a downtrend to an uptrend. The pattern includes the first day opening near the pattern of the first day near the high and closing near the low with an average or a large size trading range. It is called a pacing pattern. Also, the pattern is bullish and the opposite of a dark cloud cover. The pattern appears whenever in a downtrend and the first candle in a red and second candle in the green. Second candle in the next day which opened by a lower gap but managed to close at least halfway into the preceding red candle's body. It is next day it is size 50% of the red candle. The pattern ends the minor downtrend. The pattern is more significant if a second candle is opens much lower. Yeah, if this pattern is more significant if the second candle opens more lower. The longer red candle and green candle, there are more chances of reversal. It is called pacing pattern, and larger volume on the pattern by increase the probability of reversal. Yeah, pacing pattern, and that is a two candle pattern, trend reversal pattern. It's also called trend reversal pattern. Effective, it found during the downtrend. First candle gray, red. Second candle blue. Second candle bullish candle. Both the candles should be a big, and green candle opens below red. Green candle open below red, and green candles close slightly below to top the red candle. It is called a piercing pattern. Let's see some example for the piercing pattern. Yeah, here we could see about the piercing patterns for ICICI General Insurance stocks. We could see a piercing pattern here. The first candle is red and second candle is green. Here green candle after piercing line pattern is confirmation this stock is on an uptrend. We are waiting for the confirmation for this candlestick pattern. You can take a position here. Yeah, you can take a position here. And as we know already, stop loss is very important for avoiding loss. So we could stop loss here. The green candle sell. Stop loss come to below the low of the green candle, sell immediately. If the market break the below the green candle, then you could sell that position. This is a piercing line pattern. This is one of the most important candlestick pattern. Yeah, and next when now we move to the next candlestick pattern. Yes, that is dark cloud cover pattern. First of all, what's a dark cloud cover pattern is the meaning of it's a bearish reversal candlestick pattern where a down candle, typically red or green, opens above the close of the prior up candle. Prior up candle, typically green, and the closest below the midpoint of the up candle. Yeah, here we could see some examples. This is called dark cloud cover pattern, and also this is the opposite piercing line and a bearish pattern. Yeah, and bearish pattern. The first candle is a green candle which followed by a long red candle which opens gap up but close below the halfway of the first candle. The pattern appears in an uptrend. Most important point is the pattern appears in a uptrend. The pattern is more significant if the second candle opens much higher. Okay, when the pattern is more significant, then it was if the second candle opens much higher. Here we could see large volumes on the patterns. They increase the probability of reversal for the dark cloud pattern, and also it is a just also it's a two candle pattern and trend reversal pattern, and effectively it found an uptrend. First candle on green, second candle is red. Both candles should be big. Red candle opens above green candle. Yeah, we could see it's open above green candle, and red candle close highly above the bottom of the green candle. Yeah, we could see here. We could see the bottom. It's slightly above the bottom of the green candle. Yes, this is called dark cloud cover pattern. Now let's move on to the next candlestick pattern, that is Harami pattern. Here we could see some examples for dark cloud cover pattern. Yeah. We need to enter here and put a, put a strong stop loss here. If a market cross this line, then it might be a bullish bullish trend. So we could see here dark cloud candlestick, and we have get the confirmation here, so we need to enter this point, then market will go down. This is called the dark cloud cover pattern. Here we could see some example for that, and then we are going to see about the Harami pattern. It's the most mainly important to the market whenever we had trade in the market. First of all, Harami pattern is a Japanese candlestick pattern represented by two bodies. The first them larger with red, and the second one green. Its name derives from the Japanese word that means because of the graphic shows resemblance of, and also Harami pattern. It comes from the Japanese word meaning pregnant in English. Yeah, and the pattern indicates the trend is over or the momentum has become slow. Do you understand my point? When it is appears on momentum has become slow, the pattern consists of long green candle followed by a small red candle which falls within the body of first candle. The next day must show the weakness of confirmation reversal. Yeah, confirmation of reversal. The bullish momentum of decrease after the pattern appears. Longer the candles, the more chances of reversal. The pattern can appear in uptrend and or downtrend. This pattern appear on both downtrend and uptrend. In we could see in technical analysis. The pat the pattern is bullish Harami. If if it appears at the bottom, the pattern is bearish Harami if we appear at the top. This is called the Harami pattern, and we are going to see about the some example for that. This is for bullish Harami. Yeah, we could see here larger red candle and smaller green candle. You could see here larger red candle and small green candle. So it's a bullish reversal for a market. Then market going this point to this point up. You could see here. This is for bullish reversal, and we could see here for bearish Harami. Here longest red candle and longer green candle and lower red candle. We could see here. So then the market gonna down. Here we could see here market will go down. So it's called a Harami pattern. We are going to close section. Thank you guys. Thank you.